Good morning again, everyone. I'm Ryan Randy, an Assistant Vice President at SYGNUS Capital. I'd like to give everyone a warm welcome to our earnings call presentation for Q1 September 2024. Special thanks to everyone for making the time out today to join us. Just a reminder to everyone joining that you can submit your questions during the presentation, and we will address them during the Q&A section of the call. All information that is presented here should be read in conjunction with the detailed MD&A and audited financial statements for financial year ended June 2024. All information that is presented here, along with the earnings call recording, MD&A and financial statements, can be accessed from SYGNUS Group's website, while the audited financial statements can also be accessed through the Jamaica Stock Exchange. I would now like to welcome Jason Morris, co-founder, Executive Vice President and Chief Investment Officer at SYGNUS Capital, will be joining us, will be guiding us rather, to the earnings call presentation this morning. Over to you, Jason.
Thanks, Ryan, as usual. And welcome everyone. Good morning to you all, wherever in the world you may be. We have some beautiful weather in Jamaica, so it's the weekend as well. So I'd just like to, give you guys some highlights on the financial performance of our SYGNUS Credit Investments Group, because it's now a group with operations, investments in Puerto Rico and the English-speaking Caribbean. So, as a background, before I dive into the actual financial statements themselves, and now you can flip to the dashboard. I think last earnings call, we would have represented some new information on the Puerto Rico operations, given what would have occurred with the reorganization of the Puerto Rican business, which was acquired in 2022. And we would have stated during the acquisition period and subsequent to the acquisition period, I think at the last AGM, we would have highlighted a number of growth initiatives that were being undertaken. And happy to report that this quarter, we have begun to see, well, this actually started from the last financial year, if I'm being fair. And it's just a continuation of what happened at the financial year end, but magnified. So starting with what we have on the dashboard, the backdrop to the quarter, or one of the key highlights that we're going to go through, is the fact that SCI's net profit was 4.9 million, which for those of you who have been following SCI for a while, that would be the largest quarterly profit by some distance. And as you go through the rest of the presentation, you recognize that there are two key drivers of this. The primary driver that we'll be focusing on spend a lot of time on, is the transformation that is taking place in Puerto Rico, which began with the reorganization on July 1, 2023. And we did go into a lot of detail on that last earnings call, but I will again try and provide a similar type of information as well as updates where necessary. In perspective, right, the reason why we are calling this a transformation is because since the reorganization of SYGNUS in Puerto Rico, which is 5 quarters, the company has generated 5.7 million in net profits over the last 5 quarters. And remember that when you do a reorganization, the first 2 quarters or so, you're just trying to get up to speed. right? So we need to take that into consideration, that in 5 quarters, that company is generating 5.7 million US in net profits. That's not something to scoff at. Consistent with that level of base earnings that we are seeing in the Puerto Rico business, the platform would have deployed 24.7 million US during the Q1. And if you were to take January to September calendar year measurement to just get some perspective, it would have been a record deployment for both Puerto Rico platform and the English speaking Caribbean business. So on a net basis, the run rate of deployment is north of 150 million US over a 12-month cycle, 1-year cycle. And our expectation is for that origination / deployment to grow to greater heights over upcoming quarters. Primarily, even the additional dry powder that we expect to have, Puerto Rico is currently adding to its dry powder. I think the dry powder there is increasing by upwards of 40% to different financing facilities. And on the English-speaking Caribbean side, we are seeking 100 million in dry powder from international financing partners, and we would have struck the first relationship towards that goal, which would have been well publicized, which is the Development Finance Corporation of the United States, guaranteeing a 9 million, guaranteeing a loan, a long-term loan, which is being funded by World Business Capital, or WBC. So that's the first international partnership in what we hope will be multiple. And this is the first facility with the DFC / WBC, which we also hope will be the first of many, as our intention is to get that 10 million to be multiples of 10 million over the medium term. And as we continue to speak about base earnings and transformation and earnings power, origination, deployment, partnerships, we can't leave out risk management. And so far, the platform, and when I speak about the platform, it's SCI proper, and the unconsolidated or non-consolidated portfolio asset in Puerto Rico. That's the platform, right? That right across the platform, we have less than 1% in terms of either non-performing transactions or defaults, which is pretty decent, I would think, given the type of environment we came out of over the last 2 years and the type of environment we are currently in and heading into. And lastly, by no means least, of course, it's always nice to tell shareholders about how much money a company is making. But at the end of the day, shareholders want to have their cake and eat it, and rightfully so, right? So SCI would have paid a dividend of 1.6 million in the most recently, in November, in keeping with our mandate to try and push the dividend yield well north of 5% into the 7.5% kind of ballpark region. And one of the things that will assist us in doing this, obviously, is the transformation that's taking place in Puerto Rico, because that transformation is real dollars, right? So in short order, I would say short term, maybe I should say short to medium term, just to hedge my bets, when capital starts to flow back from the Puerto Rico business at the appropriate time, back up to SCI, that obviously will go to shareholders. And that's one of the means by which the dividend that SCI is currently paying will actually start to ramp up, right? and that will get the dividend yield to go higher. And we are very passionate about getting SCI, which is benchmarking itself against international private credit companies, getting it to where investors, you can go and buy the stock any day and your yield will be comparable to a bond-like investment in terms of the cash yield that you're getting, which is what international private credit companies actually do. And you can go and buy them all day, every day on the market and see that level of yield. So that's the background. Now to jump into the performance proper. For the first quarter, net profit was 4.92 million, up fivefold, more than fivefold, 561%. And two contributing factors. The first, of course, is that, okay, if you look at the Q1 result last year, we reported 740,000, right? And if you recall, during that Q1 earnings call, I took a lot of questions on why we only made 740,000, because what happened then, drum roll, was that Puerto Rico business, right? We registered a loss through the income statement, and that dragged down the performance of SCI. And at the time, I was very clear to shareholders and everyone that was on the call to say, I'm not worried about the volatility that would have occurred at the time that dragged down the Puerto Rico performance, because at the time, Puerto Rico would have just started, just concluded the reorganization, right? First quarter, and actually reported a decent level of profitability, not a whole lot, but a decent level. However, what would have happened is that the metric by which we reflect the earnings from Puerto Rico into SCI, we have to use a market value approach to value the investment, because we can't use the equity method, which would just take the percentage of our ownership, which is 95.58% of how much profit the company made. And so I said at that time that the gyrations involved in that formula meant that even though the company made a decent amount of money, what got reported in SCI income statement was a loss. And I was very clear at that time that this will normalize itself, right? It will come out in the wash over time. So one of the things that would have happened during this quarter is that in SCI's income statement, we would have recorded 2.67 million for the Puerto Rico Credit Fund investment income, which is a massive record. But this reflected two things. It reflected, one, the fact that the underlying business, SYGNUS, actually made a record quarterly profit, which was 1.58 million in net profit. And that 1.58 million is actually 4 times the profitability that it made in the same period last year, right, which was 390,000. So that's one thing. But the second thing would be there would have been obviously adjustments in the market value multiples that would be used, and so that 1.58 million turned out to reflect 2.67 million flowing through SCI's income statement. For perspective, right? If you look at the financial year end for SCI, do the same math. In the financial year end, SCI reported 1.3 million gain on the Puerto Rico Credit Fund investment income for the full financial year, right? But the actual underlying profitability of SYGNUS was actually 4.18 million. So when you say take off 95.58% and you have a couple operating expenses to exclude, basically we had 3.6 million, right, in the Puerto Rico holdco, but only 1.3 million of that got reflected in SCI's income statement. So we would have reported 2.3 million less due to the market market valuation approach that we were using. So in this period, what we are seeing is basically a normalization of that, although we are still behind, because over the last 5 quarters since reorganization would have been completed, the holding company that holds the shares in underlying Accrescent would have generated net profits of 5.17 million, right, over the last 5 quarters. But the gains that would have flowed up to SCI is only 3.97 million. So we still have 1.2 million that's quote unquote left on the table if you were doing a norm and taking a normal look at the underlying earnings power. In other words, what I'm saying is very simply, if and when the Puerto Rico business start to pay dividends up to SCI, then shareholders, if the company were to pay out 100% of its dividends, just for simplicity, then SCI would basically get $5.17 million, right? But what actually gets reported in our financials would have been 3.97 million. So that's the way to think about it practically. So I'm spending a lot of time on this because it's a substantial and significant movement, and I'm trying to explain to everyone that the new movement is not fictitious, right? It's very real. It's real money being made. And some of the pain that we took in prior periods is being normalized now. But the key thing to focus on is that the underlying business itself, right, is doing phenomenally well. They had a 4-time increase in its net profit, and it has over 40% increase in its dry powder capabilities, and therefore any amount of deployment that you saw we doing in Q1 or would have done over the last 5 quarters since reorganization in Puerto Rico, you need to multiply that by a factor on a go-forward basis, because you know, the market in Puerto Rico that SCI is exposed to is much bigger than all of the English-speaking Caribbean markets that SCI currently operates in proper. And I made this point at maybe the AGM and a couple of earnings calls in the past. So I'm just making it here again so that shareholders, prospective shareholders, can get a very good understanding and picture of the transformation that's happening with SCI, and we are in the early innings of that transformation, and I expect as we go through multiple quarters we'll see that. So going into total investment income, that 5.09 million would have primarily been driven by the Puerto Rico gains and the Puerto Rico Credit Fund investment income. Of course, net interest income in SCI would have also increased, but that increase would have paled in comparison to the substantial movement in the underlying business in Puerto Rico. So that is up 208.8% to 5.09 million versus 1.65 million last year. Net investment income, 3.83 million, up sixfold, up 606%, 606.2% versus 540,000 last year. And all of the numbers last year, as I said before, would have been negatively impacted by the opposite of what we are seeing now. Of course, earnings per share of 0.85 US cents is a record, obviously. I think this earnings per share probably in many instances rival the total earnings per share that SCI make for an entire year. So that's a substantial development. And of course, the dividends that we would have paid subsequent to the end of the quarter, but would have been announced during the quarter on the audited financial year-end results, which was a record 6 million plus, was 0.00276 US cents. To give you additional color on the financial results, and I won't spend a lot of time here, Ryan, can you flip? If you look at the line, I've circled a couple of things on the income statement. You see where that Puerto Rico Credit Fund investment income 2.672057, and I have a chart that I'm going to explain this some more, because I really want everyone listening to understand what's going on with this, right? You can see that Q1 September 2023 we registered a loss, right? And at the time I said that we would recover somewhat, and we did recover by the end of the financial year, because you can see financial year end we did 1.304 million, but we really took a beating during that first quarter. Not because Accrescent made losses, Accrescent actually made a profit, but because of the market valuation approach that we had to use. Another thing I want to highlight on the income statement, I won't spend a lot of time on it now, maybe in future quarters I will, is that PR Business Impact Fund investment income reflects an investment that we would have done for initial investment of 1.5 million in a business impact fund. It's actually named SYGNUS Credit Investments Puerto Rico Business Impact Fund, right? So it's a business impact fund that SCI would have sponsored in Puerto Rico. The size of that fund is 125 million US, and it's in the capital raising process at the moment. It would have had a first close in June. I think the fund now has about 24 or so million US in committed capital, with some very well-renowned impact investors globally, such as Calvert Impact, etc. So I'll give you additional information on this. This figure does reflects kind of our share of the profitability of the company at the end of Q1, based on our investment, which, as I said before, we sponsored the formation and creation of the firm, and it actually bears the name of SYGNUS Credit Investments in Puerto Rico. But I'll provide more information on that in upcoming quarters on this. I also want to show you go to favor again. During the quarter, right? Yeah, we're not done yet. During the quarter, we had a 1 million favor again on the financial instruments in the portfolio, and this figure, we don't really control this figure. This figure will vary based on market volatility and where interest rates go or don't go. Obviously, because the Fed cut rates very sharply, the market adjusted aggressively, and that's why you have this big gain. I suspect that as we go through time, if Fed then changes its tone a little bit and become a little bit more hawkish, that some of this fair value gain may well reverse, right? So I wouldn't pay too much attention to this $1 million. The key, as I keep telling investors every time, is to focus on the top line, which is total investment income. That's where the rubber meets the road. That's your core revenues, and that's what drives the core profitability of the business. And then maybe I should also mention the fact that foreign exchange, we had a decent gain of 299,000 in the quarter, of course, because SCI would have borrowed money in Jamaican dollars and invested it in USD, and if the USD currency depreciates, then obviously we get the benefit of that. Now, the next two slides are very important. I think once I go to the next two slides, we pretty much would have gone through 3/4 of what I want to say. The earnings power. I went through this for the financial year end, but I'm going to go through it again. So, Accrescent Financial LLC, which changed its name from Accrescent Financial Corporation. So it was changed from a corporation to a limited liability company deliberately to reorganize the business. And what I want to show you is, the performance of how it is that we get the 1.5. How did we move from the underlying performance of Accrescent? So read from the bottom of the page up, right? SCI went and acquired Accrescent, and it used a number of different companies to do it. It went through SYGNUS Credit Investments Puerto Rico Inc., and then that, which we own 95.58% of, and then that owns 100% of SYGNUS Credit Investment Puerto Rico Fund, which then owns Accent Financial LLC, right? So that's the structure. So if you read from the bottom up, from the operating company, which is Accent Financial LLC, where we acquired the stake in 2022, that company for the quarter made 1.58 million. For comparison, when you look at the audited financial statements, which has a lot of footnotes, etc., and I encourage you to read read the annual report, right, fully, so that you can apprise yourself and make wise investment decisions. Then that company will have made 4.18 million in net profit. So for the quarter, 1.58 million. For the full year, last year, June, ended June, 4.18 million. So you can see already that the quarterly net profit figure is on a trajectory that's bigger than what would have been made for the full year last year, obviously, because it's just five quarters in the reorganization. Then if you move up to the holdco that holds the shares of Accent Financial Limited, that 1.58 million gets translated to 1.48 million for the quarter, right? Because you have, operating expenses at the holdco level. From the 4.18 million for the financial year end, that gets translated 3.69 million net profit, right? So far, so good. That means to SCI shareholders, you actually have power over 1.48 million for the quarter and power over 3.69 million. That effectively is what dividends can be paid out of, is what I'm saying, right? Now, what gets passed through SCI's income statement is not the 1.48 million at the SCI PRF holdco level or the 3.69 million. We have to do a fair valuation, we have to use a fair value methodology. And that fair value methodology would have translated that 1.48 million to 2.67 million for the Q1. Similarly, it would have translated the 3.69 million in net profit to 1.3 million for the financial year end. So, as you can tell, the fair value market multiple method can gyrate, it can move around and cause the profit that is reported in the holdco, from which dividends can be paid, cash in your hand, to be very different from what gets reported in the SCI income statement. Fair game. But also, what you should note is that, okay, the power of earnings of the operating company, Accent Financial LLC, is rising at a very rapid rate. And as this rapid increase in underlying profitability move from strength to strength, the potential to pay back to shareholders cash in your hand from that earnings power will rise. And so when you look and normalize this across multiple quarters over a period, for example, for the last 5 quarters, the earnings power that could literally pay you dividends is 5.17 million at the holdco level, and at the Accent level, if you add up the numbers, it's 5.71 million, right? But what has been reflected in SCI's income statement, so if you add up the 2.67 million and the 1.3, it's only 3.97 million has flowed through SCI income statement. So I hope I've provided a little bit of color to shareholders, prospective shareholders, etc., so you can understand what's really happening with the company, and you can make wise investment choices. Enough said. Next slide that I want to spend a little bit of time on is to give you additional color. So this is another way to look at the transformation that's happening with Accent. So the top part of this slide, I am showing you the Q1 high-level financial performance for September 2024 versus Q1 high-level financial performance September 2023, right? Bearing in mind that the reorganization took place July 1st, 2023. So that means you have the 1 quarter of reorg versus now the 5th quarter of reorg. And that reorg involved 2 key things: change from an internal to an external fund management structure, which means before we actually had the employees and all kind of expenses related to employees as part of the investment company, while now The only thing that you have is a management fee and corporate service fee, with your other operating expenses like audit fees, etc. So we have removed the base cost from the firm. So high level net interest income was 1.73 million versus 0.9 million. And net profit was 1.58 million, up 4 times versus 0.39 million. So that's just giving a quarter of a quarter comparison. While that is important, the more important thing for the long-term sustainability of the firm that shareholders should focus on is really the benefits of the reorganization in relation to the efficient cost structure. So effectively, the change from an internal management company to an external fund management structure, which is what SCI has. We are the fund managers, we charge the management fee, and we have to deliver performance to you, right? If you look at pre-org, that is financial year 2023, before the reorganization took place, the efficiency ratio was 67%, and it was above 50 pretty much for a very long time, right? Which says for every dollar of revenue generated, 67 cents went out into expenses. Fast forward to post-reorganization, Q1 September 2024, every dollar of revenue that is generated, only 26.5% of it is going out in operating expenses. So that's a very efficient cost structure. So what it means is that your top line revenue, when you make it, will generate more bottom line net profit. I hope that is very clear to everyone. And final thing on this page is that as part of the reorg, we would have made the firm more efficient because it doesn't pay the level of taxes that it would have. So when it was a corporation, its tax base was very different from its tax base now that it's a limited liability company, which is taking advantage of the tax laws in Puerto Rico. So all of that really means that there's a seismic transformation taking place with regards to the company that was acquired in 2022, Accrescent Financial Corporation, now known as Accrescent Financial LLC. So we can flip to the rest of slides. Efficiency and management expense ratios for SCI would have all benefited from the record level of profitability. So I won't go through this in any more detail. It's all within the threshold levels. In terms of the balance sheet, shareholders' equity would have increased to 77 million, obviously increasing because of the level of the profitability reported in the first quarter, and total assets would have increased to 203.36 million. Balance sheet KPIs, nothing much to report here. Everything is within the targeted threshold limit: debt to total asset coverage ratio, net debt to equity. And in terms of the margin that we are generating on the business, SCI, everything is within the threshold levels. Now to go through a summary of the portfolio activity. Investment activity, I think this should actually say for the quarter and not financial year in June. Is this I think that there is let me see what's happening here. I think this slide is an error on a slide, so I'll have to skip over that. Apologies. We'll correct it for the when you go online to access it. In terms of risk management, we are showing here the ratio of different stages that we have in which we have assets. Stage 1 means standard monitoring. Stage 2, companies that we are watching with a keen eye because something could develop with them. And stage 3, which is the highest risk asset in the portfolio, which they have defaulted already. And we will be in the process of trying to recoup or recover our monies. So I have an update, right? One of the companies that was in bankruptcy and was sold, I think I keep saying this every quarter, but I think we are a lot closer to recouping our investment, given our collateral coverage and given the progress that would have been made in the negotiations with the process to come out of bankruptcy, right? So we think that we are pretty close to recouping those monies. As for MV Cayman, which is the Cayman asset that we would have written down 100%, there are no developments with that investment to speak of. The company obviously is in bankruptcy. The asset, senior lender still has the asset. There are no firm bidders to buy the property, and so we don't have any update at this time in terms of whether we recoup any money on that. That we would, if that were to occur, we would obviously write back some monies to the bottom line. But as I've said consistently, I don't expect to. I'm not very hopeful. I remain hopeful, but I'm not very hopeful. Right? So if it happens, I think I would be eternally grateful, and I'm sure shareholders would be as well. The next slide, risk management. So our expected credit loss as a percentage of the private credit portfolio is tracking at less than 1%, which is what it has done for the past year and a half. We continue to add assets to the balance sheet and build and grow the balance sheet. And as we go into a lower interest rate or a reducing interest rate environment, this ratio may start to trend down. But for the time being, the good news is that in terms of crystallized losses across the platform, certainly in post or COVID problem assets remain pretty healthy. In terms of portfolio allocation, the company is pretty diversified across 19 different industries. When you look at the combined platform, which includes the non-consolidated portfolio in Puerto Rico. As we go through time, of course, we will make strategic decisions in terms of which industries we want to increase our exposure to. But for the time being, we are pretty comfortable with having the lion's share of our exposure in construction and financial services, with only those two industries being above 10% allocation for the moment, especially in Puerto Rico, where they have over 50 billion in unused resources provided by the federal government of the US that already sitting and waiting and is being drawn down by the Puerto Rican authorities, because Puerto Rico has not really done a lot of construction for a very long decade and a half period. So they are playing catch up now, and we are seeing tremendous value being created in the construction sector in Puerto Rico, which is very good. It means that even if you go into a recession, that infrastructure capital expenditure would keep the economy growing healthily for quite a number of years, for the next several years. In terms of exposure per region, Puerto Rico remains the largest exposure at 30.7, Jamaica at 24.3, and I think as we go through time, and Bahamas at 15%. Now, as we go through time, there's gonna be a kind of a battle royale between these three, but you can expect the largest economy by some distance. Puerto Rico is going to dominate especially given its additional dry powder. Jamaica, of course, will be hot on Puerto Rico's heel. We obviously have additional dry powder that's dedicated to Jamaica. We'll be raising additional dry powder that will also be dedicated, a large part of it will be dedicated to Jamaica. So Jamaica, with the pipeline that we are seeing in Jamaica, will be keeping pace. But I also expect that based on some initiatives that we are working on, that the Bahamas will also move from strength to strength. So these three economies are going to continue to play a leading role in terms of their share of exposure over the rest of the financial year and into 2026. Finally, in terms of the outlook, right? There are 4 pillars to enhancing shareholder value. And the first one, of course, well, I think there's a typo there, we should say Accrescent Financial LLC, right? The first one, of course, is the scaling of Accrescent. We are showing now a 4 times increase in Q1 net profits. That's not a one-off thing. We're gonna see this consistently over the remainder of the financial year. Buttressed by the fact that the level of dry powder that Accrescent has increased substantially. 1. 2, the Puerto Rico business finances itself using revolving credit facilities, which means that the cost structure of those and the cost structure of those revolving credit facilities are variable rate. They are based off SOFR, which is so as not to use financial jargon, they are based on the trajectory of where the Fed funds rate is, right? If the Fed is cutting rates, SOFR is going to go down. If the Fed is hiking rates, SOFR, which is a benchmark, short-term rate is going to go up. So given the fact that the Fed has cut rates, the cut rate they have cut rates, then it means that SOFR is going down, and that automatically means that the funding cost in Puerto Rico for Accrescent is going to go down with immediate effect, right? Once the rates get cut, it goes down. On the plus side, the balance sheet actually deploys capital using fixed rates. So it's going to take a while for the balance sheet fixed rate assets to run off and get repriced with lower yielding assets. So the business will actually net the extra spread. So those 2 things means that the business is in a very, very good position, right? So for what it's worth, I'm giving you that information. Pillar number 2 is what's our strategic growth path. So just giving an update on all of these items. We said we wanted to participate in at least $1 billion of private credit transaction across the region. I think we are perhaps 200 million in now, and we are just a year and a quarter in or so, right? And we are close to 200 million. We're probably 180 or thereabouts. So we expect that this $1 billion that we spoke about is going to be achievable. And obviously, if we have a private credit platform that is participating in $1 billion worth of transaction, we may not fund the entire $1 billion, but we are underwriting and doing all kind of different stuff, then that's a substantial business that you're looking at, right? Core revenues, we needed to get past 12.5 million US. That was our target. I think we have 2 years left to do that, or a year and 9 months left to do that. And based on our trajectory, I think we are on a good path to exceed that, right? I think that target is more than achievable just based on the Q1 performance. ROE, we said we need to get that steady state for the firm to be generating more than 10%. Return on equity, at the end of the day, we can make lots of profit, but we need to measure that on the equity base of the company in terms of performance. And so far, we are doing well in that regard. I think the Q1 earnings is our substantially more than 20%, so more than double the target that we want. EPS, we said we want to go that 20% per annum over the next, an average over the next 3 years. A year ago we said that, and based on where we are today, I think we are achieving that, and we hope to maintain that path. Dividend yield to be greater than 5%, and the IPO price, that's in progress, and this will start to. So SCI itself, obviously, its earnings is going up, but outside of that, because of what's happening with Accrescent, as we get to the period when Accrescent start to do a cash back to its shareholders, which ultimately is SCI, and therefore you, SCI shareholders, that dividend yield is going to rise. And we spoke about this on many AGMs before. 100 million credit facilities and quasi debt, 100 million plus. So we want 100 million in international credit facilities. And when you add to that quasi debt that we're trying to raise, is 100 million plus, right? So currently, I think we have applied to the regulators in Jamaica to get approval to launch a perpetual preference share. We hope to get approval, hopefully within hours, if not days, to launch that facility, to raise additional capital to fund the pipeline that we have, particularly in Jamaica, which I think we have about right now approved transactions that are in excess of 20 million and more than 50 million in mandated transactions just for Jamaica alone, right? So when you have approved transactions, and that means that we are going through the process of documenting the transactions. So those transactions are effectively deals that you could say that's going to add to your balance sheet with immediate effect. And therefore, our capital raise, hopefully, if we get approval today or Monday, knock on wood, then that transaction can be launched. And we hope that there'll be strong participation from everyone. The DFC / WBC facility for 10 million, that's the first step in $100 million stairs that we are climbing. We want to diversify the financing base, the financing base of the company. Because if you think about it, capital that we raise in local Caribbean markets are primarily fixed rate financing. The capital that we raise from international financiers, by and large, are going to be variable rate. We can always fix them if we want, right, to hedge. But they are primarily variable rate. And so what this does, it gives us a lot of flexibility, because if we get up to 100 million in terms of financing that has a variable rate structure, and we also have our fixed rate debt that, let's say, rivals that amount, then that gives us a lot of flexibility when rates are coming down. When rates are going up, it also gives us flexibility, right? So you can play two sides of the fence, so to speak. And it means that we won't be dependent on just one financing source for capital. We're not simply depending on let's say the Jamaican market, which is where the company is listed, or if we enter other regions, as we are in the process of doing, meaning enter the region proper then basically we are diversifying where our source of funding comes from. So if something happens, for example, to one economy where we are sourcing capital from, and capital dries up from that region, then we have another region that we can perhaps increase our capital drawdown from. And so this is very important for us. And the first step with a development finance institution such as Development Finance Corporation of the United States is a partnership that we cherish, and we hope to expand this relationship because we know that the DFC is very keen and doing a lot more transactions in Jamaica. And we were the first to strike this one with them, and we hope this will be a very long and fruitful partnership. We hope as well that the launch of our preference share will go quite well with prospective investors in terms of the take-up. Third leg is new business and impact investment strategy. So we would have invested in SYGNUS Credit Investments Puerto Rico Impact Fund, which is a business impact fund, as I stated before. Initial investment of small, 1.5 million. But I think our commitment is about 2.5 or 3 million, and we may increase our investment there. This is expected to generate double-digit return from a ROE to us, which is good business, while at the same time, deploying capital in impact themes, because being a responsible investor is very important, and we are seeing where in Puerto Rico, SCI actually has exposure to now, I think, 4 different business impact funds in Puerto Rico. There's Lift 1, Lift 2, Acquisition Financial Partners, and now this one that SCI has actually sponsored fully and went in from the get-go at the start to enhance our strategy of responsible investing. Other thing under this in terms of new business is that we have a financing product that we are working on that will launch sometime in or around the first half of next year, and that's in progress. And when that comes to fruition, we'll update the shareholders. So in essence, if you look at these first 3 stools, right, the business is not just on a regular growth path. The business is being scaled. We are scaling the business, and the way we scale our business, our reference to scaling our business is, okay, you used to generate $10, and you can always say, well, I'm growing the business by 20%. So every year, right, you're making $2, which is going to business. When you scale the business, what you say is that I used to make $10, and now my trajectory is I'm gonna jump to making, let's say, $30 or $40, and then I'm gonna grow that $30 or $40 by, let's say, I don't know, 15-20% a year. That's the difference between growing versus scaling. And we are in the early innings of scaling the business, which means from the level of portfolio of investments that we have on the platform, scaling means, we now have about 300 million overall. If you include the Puerto Rico business, we really need to get to 500 million in short order. That's kind of the size of the portfolio. That's what we mean by scaling, right? Which is a substantial jump in your underlying earnings base. And to do this, we need, obviously, financing. We need large pools of financing. So, for example, SCI is starting the process simultaneous while all of the other capital raising activities are going on to get a revolving credit line, a substantial revolving credit line north of 25 million US. In Puerto Rico, their credit line, I think, is probably going to be close to 100 million US, right? And their balance sheet is smaller than ours. We have a 200 million, SC has a $200 million balance sheet, but its credit line is 8 million US. And so if you look at like private credit firms in the United States, all of them have massive credit lines from commercial banks. We face a challenge though, because in our neck of the woods, and with SCI primarily gets financing from commercial banks in Jamaica, we can't get that access. So we are on the path to negotiate and get that access internationally, which will give us the level of flexibility to do the things that we need to do to scale the business, because there's no shortage of demand for the product that SCI is providing, or the solution that SCI is providing, which is flexible debt capital to growth businesses across the region. That's what we do, and growth projects, right? It's capital that's perfectly aligned with entrepreneurs who are expanding and growing their business and need additional working capital. I need an innovative solution to their financing needs. That's what SCI does. And we are doing that in Puerto Rico, and we are doing that in the English-speaking Caribbean. So before I go to share buyback, I just wanted to kind of summarize this to say the company is on not just a growth path, but we are scaling the business to be much larger and much bigger than it was before. We are committed to becoming one of, if not the dominant force in Puerto Rico. And because I remember, I was asked in previous earnings call, are we thinking of branching out from the Puerto Rico business to go to other markets? And my response was, we want to become first, the number one and number two private credit firm in Puerto Rico. We want to dominate the Puerto Rico market. And after we feel that we are in a dominant position in Puerto Rico, then we will look to what's the strategy for other markets. So it's not that the strategy for other markets is off the table. It's just that we are lining up our ducks in a row. Be dominant in your home Spanish-speaking market first. Then to scale that Spanish-speaking, to scale that business, then you look to go to other markets, which at the appropriate time, when we are ready to do that, obviously we'll communicate to you, our shareholders. I'm trying to give shareholders as much information as possible for you to make investment decisions, given that you're not in the belly of the business like we are. So the fourth thing is share buyback program. I have nothing to add other than that the share buyback program is ongoing and will continue as we have in the past. And that's the end of my presentation this morning. I'll now move to take questions.
Yes, thank you for that, Jason. First question we have is in relation to the cash flow statements. In reviewing the cash flow statements, you would have seen an increase in the operating cost paid versus full year 2024. Could you give some additional color on this?
Yeah, so the cash flow state in terms of operating cost. So the way you have to think about SCI's business, right, is the true cost for SCI is really management fees and corporate services fees. Those make up the majority of the operating expenses. Is that the question that's being asked, or is it a specific item in the cash flow statement?
I believe it's a specific item, which is the operating cost.
Okay, let me just traverse to that to see what the question is. Oh, so in the cash flow from operating activities, the other operating costs paid 5.89 million versus 1.55.
That's correct.
Oh, I would have to get that answer to get back to you with that. Because I know that there was a change in the way how the cash flow statement has been structured as at the financial year end with new accounting standards that are coming in. So I am not sure. I can't explain that for you, to be honest. I would have to get the answer and come back to you. But what I can say about operating costs is that if you look at the income statement, the operating expenses are primarily driven by management fees and corporate services fees, which would have been just under $1 million for the quarter. So I'm not sure. I suspect that there's some adjustment being made for the change in this standard in terms of how the cash flow statement is now being reported. So I'll have to investigate and come back to you to give you that answer. So perhaps Ryan, you should take their email, and I will provide a response.
Okay. I'll take their information. Yes. So we actually had just one question this morning, Jason. So I believe that's it in terms of questions. So I thank you for that.
Only one question. Incredible. This must be the first.
I think we're explaining the concepts really well, so these questions are coming in.
Okay.
Yes. So as we move into close, we'd like to thank all attendees for spending the time to follow our presentation this morning, and also thank you to you, Jason, for guiding us through the presentation. And just as a quick reminder that the earnings call presentation as well as the recording will be available on SYGNUS's website as well as our YouTube page. Thanks again, everyone.